Sure. Thank you so much, everyone, for coming. I'm going to talk to you about finance and credit today. Some of you have some misconceptions already about what credit is. You need credit to get anything in this world, such as a cell phone, utility, house, car, and in many states now, a job. Without credit, you can't get anything in this world. Any advice I give you, it's based on my own personal financial experiences. I actually do my mother's finances. I refinanced her house and car, and I've been doing it since I was a child. I've never been late on any kind of bill. So my advice is advice you wouldn't read in any kind of book, and it's guaranteed to help you. Well, why is good financial behavior and credit important? As you know from your parents, without good credit, it makes it difficult to save for your child's education, save for yourselves, and it causes you to have a stress-filled life. It helps you get a better job because 60% of employers now check your credit, your FICO score, and your credit report. The reason for that is because, and this is not meant to be rude, if you have bad credit, it suggests that you're low in character. And so if you're low in character in their eyes, then you're not trustworthy enough to do your job right. So that's the primary reason why having good credit is so important. It also secures your family's financial future. Any bank that gives you credit, such as a loan or service or any company, that's considered a creditor. A credit, you have to pay back the loan money. So credit cards, automobiles, mortgages, personal loans, those are all credit. Many of you have a student loan right now. You have a credit score and credit report right now. A creditor is any financial institution or bank or company. The utility company or just any company that gives you a service, they're considered a creditor because you have to repay that service. It is very possible anyone can use the water for a month and not pay it, and that will negatively go on their credit report. The purpose of credit is to show that you're financially responsible and that you can pay your bills. And as a business, they need to see that you have a good payment history because they don't want to give you loan money or a service and you just never pay it back. Then they have a business loss. That's why everybody must have credit. You must get a credit card. There's no way to escape that. When people say, I have credit, they're referring to their credit history. When they say I have good credit, that means they've never been delinquent. When they say I have bad credit, that means they have been delinquent. When they say I have no credit, then that means they've never had a loan or service or anything. Your credit history shows your credit worthiness. Credit worthiness is the level of trustworthiness you have in repaying a loan or service. The goal of credit is to show that you have a high level of credit worthiness. Credit cards are needed. They show that you can pay your bills. You can't just get a student loan or just a car loan and never get a credit card. You need to get them. And here is the reason why you need to have good credit, because if you have bad credit, contrary to what some people think, you're going to struggle to find a job.
Ben Tracy brought us a story today that shows that sometimes the unemployed just can't win. It turns out the bad credit rating that often comes with unemployment can keep folks from landing a new job.
Mark Manzo never thought he'd struggle to provide for his two daughters.
We weren't rich, but we were comfortable. We had a house, we paid all our bills on time. I had excellent credit.
He and his wife Kristen were making $96,000 a year, but last year the stalled economy forced Manzo to shut down his car rental business near Los Angeles. Without a paycheck, he can't pay the bills. The bank foreclosed on the family's condominium.
What's it like to be back here now?
It's a little sad.
Their credit is now wrecked.
As a man, I feel like I feel really bad, honestly. I feel like I can't provide for my kids. I can't seem to find a job.
Manzo says his damaged credit is why he's been rejected 8 times for recent jobs.
They sent me a letter stating that because of information on my credit report, I was not being considered for the position.
And what did you think when you saw that?
My heart sank. I felt like, what am I going to do? What else can I do?
60% of employers say they now run credit checks on some or all of their job candidates. It's legal as long as the job candidate agrees to it, and employers tell them their credit is the reason they're not being hired.
Business owners often say credit histories reflect someone's integrity and reliability. They say bad credit can be a sign of someone prone to corruption.
If you're stocking shelves if you're cleaning rooms, if you're a cook, any of those positions that really you do not need a credit check.
State Assemblyman Tony Mendoza wrote a new law in California. Beginning in January, use of credit checks in hiring will be banned. The ban will not apply to jobs in law enforcement, management, or jobs involving large amounts of cash.
I don't think that a person's credit score or credit history is indicative of a person's trustworthiness or their work ethic.
California is joining 6 other states restricting the use of credit checks to screen job applicants, like Mark Manzo, who stopped opening bills he can't pay.
I can't give up. I have 2 little kids. That's not an option for me. I have to keep going.
If Manzo doesn't find a job soon, he may have to file for bankruptcy. Ben Tracy, CBS News, Los Angeles.
Mark Manzo tells us that he's tried a new strategy. In his last interview, he brought up the credit problem and explained it. And that worked. He told us today that he got a job.
So just for the reason that he faced, some of your parents, they can't get jobs because of that reason, because they have bad credit. And it makes it harder for them to pay the bills and save money. And even if you do get a job eventually, you're still going to have high insurance premiums because all insurance companies, such as for term life insurance, car insurance, dental insurance, they all check your credit score and credit report. The reason for that is because it is possible to use the insurance service and not pay the bill. And then the insurance company has a loss. So yes, they all check credit. So when you have good credit, your insurance premiums on all your insurance policies are much cheaper. Bad credit guarantees paying high interest and fees. There are credit cards out there, such as this one, that have interest rates of 80%, 36%, 59%. On top of that, they have annual fees too. So even if you never use the credit card, you still have to pay the annual fee. The annual fees are expensive. They're like $79, $80. I've also seen them on the internet up to $100 and more. So people with bad credit get these credit cards because no one else will grant them a credit card. No traditional bank will grant it to them. Here's an example of someone with bankruptcy or bad credit, what kind of credit card they would get. And I don't want anyone in this room to get such a credit card, which is why I emphasize have good credit, pay your bills all the time.
Using plastic is second nature to most of us, but there are people who can't get credit cards, at least not the kind you normally think of. For example, people with no credit history or a bad credit history, especially people who file bankruptcy. For them, the pickings are slim. So slim, in fact, they might find themselves looking at a deal like this. The Continental Finance MasterCard, issued by First Bank of Delaware. The deal? First, an account setup fee of $99. Then, a program participation fee of $89. An annual fee of $49, and a monthly maintenance fee of $10. So before you get this card in the mail, it's already got a balance of $247 on it. And what's your credit limit? $300. So when you get your card, you're $53 away from going over the limit. But wait, it gets better. Because if you're responsible and you pay your bills on time, they're going to raise your credit limit $100 at a time and charge you $25 every time they do it. How can a company justify a card like this? First Delaware wouldn't comment. A Continental Finance spokesperson insisted their card was a good choice for people with bad credit. But there are other options, like a secured credit card. You put up a cash deposit, say $300, to get a $300 credit line. Here's one with a rate of less than 9% and no fee.
Bottom line, just because you've got bad credit doesn't mean you should jump on the first offer you see. Shop around. And no matter what kind of card you're considering, read the fine print. For Money Talks, I'm Stacy Johnson.
So that emphasized why I said always have good credit. And if you have bad credit, get a secured credit card. Don't get one of those bad credit cards on the internet. They're very expensive and rip-offs. A secured credit card is when you put a security deposit up, such as $300. That's your spending limit, and you still have to repay that money. Let's say you never pay it, they'll ruin your credit, and they'll keep that security deposit money. The personal recommendation, the cheapest secured credit card I've seen out there for people who have bad credit or no credit is the Wells Fargo secured credit card. The annual fee is only $18. I looked on other websites, the annual fees are much more expensive. The interest rates on all secured cards are pretty high, so ultimately don't carry a balance. Some people said to me that you've been told that you need to carry a balance to build credit. That's not true. If you carry a balance, you're hurting your credit because 30% of the FICO scoring model, which is the scoring model banks use to calculate your credit score, carrying a balance lowers your credit scores because it looks like you're spending beyond your means. And so you're more likely to declare a bankruptcy or default, and the bank has a loss. So whoever told you that you need to carry a balance, that's not true. After a year of history, ask the bank if they can remove the annual fee and upgrade you from a secured card to an unsecured card, meaning they give you back your security deposit money and now they trust you blindly. And that causes your credit scores to go up too because now it looks like a business can trust you more. To establish good credit, you need to check your credit report on annualcreditreport.com. Someone told me that their parents signed up for a water service using their social security number, and now this person has a collection account on their credit report that they never knew about, a classmate of mine. So for that reason, check your credit report and make sure there's no negative information, because as bad as this is, sometimes negative information is reported to the credit reporting agencies under your name, even if you had no idea you had an account. You need to have a source of income to get any kind of credit. You need to apply for a credit card. I recommend getting a credit card at a credit union because by law, even if you default, they can't increase your interest rate above 18%. If you got a credit card at a traditional bank and you were late by many days, they can take you up to 30%. Don't apply for many credit cards at once because it lowers your credit score. Even if you're getting denied for the credit cards, don't keep applying because that's going to cause your insurance premiums to go up. They'll find out about all those credit checks, and they're going to think that why are you so desperate for loan money? It makes no sense to them why you're doing that. Use your credit card once every 6 months. Don't just never use it. The reason for that is because it costs money for the banks to run their credit card programs, and they pay fees to the credit agencies to check your credit reports. So they want to make a profit off of you. And if they close the account down, it has a negative impact on your credit score. And another thing is that when you have credit cards, don't close them. The only situation in which it's just justified to close the credit card is if there's an expensive annual fee that you can't afford, or you have many years of credit history, like 15 years of credit experience, then it won't do too much damage to close your credit card. If you have way too many credit cards out there, that can lower your credit score too, because the bank thinks that you're going to use all of it and put yourselves into a position that you can't pay anyone. People say that they're late because they lost their job. Really, I don't think many people want to hear this, but you were never supposed to be in that much debt to begin with. When you lose your job, you should have enough money in your bank account to repay the debt. If you don't have enough money, then that means you were spending way beyond your means. Even if you're running a business, you're still not supposed to spend more than the profit or take huge gambles like that. Before becoming late on a credit card, contact a nonprofit credit counseling agency, such as In Charge. Don't contact a random credit counseling agency you found on the internet, and don't pay credit counseling agencies high fees because always go to nonprofit agencies. And make sure you read a review of the company that you choose to go into business with. Contact your loan issuer of the credit card or whatever loan it is that you can't pay and ask them if you can defer the payment, but don't make a habit of doing that or the loan amount will compound with interest and triple in its balance. Don't file for bankruptcy or debt settlement because it costs money. I think it's like $700 to $800 to file for bankruptcy or a settlement, and you're going to hurt your chances of getting a job, and your insurance premiums are going to increase like crazy. And with bankruptcy and debt settlement, I'm not a bankruptcy attorney, but I do know this vaguely. When you declare a bankruptcy or settlement, the banks to whom you owe money, they clean out your bank accounts. They levy your bank accounts, and there's nothing you can do to stop them. So you'll have $0 in your bank account. You can borrow money from family. You can get a new loan and transfer the balance. When I say transfer the balance, meaning if I have a balance on a Capital One credit card of $900 that has an interest rate of 30%, and I apply for a new Chase credit card that has an interest rate for 12 months for 0%, I can bring over that $900 balance from the Capital One credit card onto the Chase credit card and pay 0%. So that's how that works. You can use any savings or assets to pay for the credit card debt, and keep looking for a job aggressively. A credit score is known as a FICO score, Fair Isaac Corporation. That's the company that designs the credit scoring models. Some businesses use what's called Vantage score, but it's very low. 90% of banks use the FICO score, and for this reason, you should only order a credit score off myfico.com. Don't order a credit score from those other websites on the internet that claim free credit scores and whatnot. Those scores are not authentic because they're trying to replicate FICO. It's not the same thing. They're fake scores, which is, and any website from which you order a credit score that's not myfico.com is called a FACO score because it's not authentic. A credit score doesn't always suggest that you're financially responsible. It is possible to have a delinquency, meaning late payment, from 6 years ago or 5 years ago and have a high credit score of 700 and above. That's not really good because the banks will look at the content of your credit report and they will find that delinquency and they're going to get on you for that. So don't think just because I have a high FICO score, then that means I have good credit. No, you need to have all paid accounts. It's also possible to have a low credit score for minor reasons and not have bad credit. For example, I've never taken an auto loan, and for that reason, my credit scores are not high. They're in the 690 range. And I've only had a credit card for 1 year. And because of that, one year of experience does not tell them I'm going to repay their bills. They want to see at least 10 years of experience. And again, only order on myfico.com. The credit bureaus, Equifax, Experian, TransUnion, they're private companies. They're not run by the government or anything. They collect your personal financial information, such as what loans you have. Your student loans that all of you have right now are on your credit reports. They don't collect your checking or savings account or IRAs or anything, just loans and payment history. The Federal Trade Commission monitors them. When you apply for a credit card, like if I apply for a Citibank credit card, Citibank will pay a fee to Equifax and will order your credit score and credit report from them. That's how the credit agencies make their money. And for consumers that order their credit reports from those agencies and you pay them a fee, then that's also how they make their money. Are a victim of identity theft, change your social security number immediately. Call all the credit agencies, Equifax, Experian, TransUnion. Freeze your credit report. Also freeze your check systems report because it is possible someone can open up a checking account under your name and make it negative. That does happen. And then also file a police report immediately. And also inform all your credit card companies that you're a victim of fraud, because if your credit card company notices on your credit report that all these fraudulent credit accounts are getting opened under your name and all this activity is happening with your social security number, they may think that you'll default with them. So inform your credit card companies that you're a victim of fraud and no negative action should be taken against your account. You don't want them closing your credit card. That'll negatively affect your credit scores. If for those of you that have a job, you need to start saving for retirement right now, regardless of your age, 20, 30, 40. If you wait too long, it's going to be harder to save for retirement. You need to open up an IRA, an individual retirement account, at a credit union or community bank. I'm not going to badmouth brokerage firms such as Edward Jones and whatnot, but from my understanding, they usually charge expensive fees. So that's another option, but be aware of the fees. An IRA is an individual retirement account. There's two types of IRAs. There's a Roth IRA and there's a traditional IRA. Roth IRA means you pay taxes on the money and then it goes into the account. It's called after-tax dollars. However, the money that you put into the Roth IRA, you cannot deduct it from your taxes. And the beauty of a Roth IRA is that the money, the interest that you make, the earnings, it grows tax-free. As long as the Roth IRA exists for 5 years, when you turn, I think, 59 and a half, and you reach, that's the age of retirement, and you take the money, you won't have to pay any taxes or 10% tax penalty or anything. A traditional IRA, you can deduct it from your taxes, but when you take the money at retirement, then you have to pay taxes on the interest and pretty much all the money within the IRA. I like Roth IRAs because even before retirement, you can take the money that you deposited, not the interest, and pay no 10% tax penalty, and you can save your house from a foreclosure or your car from repossession. That's why I'm a fan of Roth IRAs. And you don't pay the 10% tax penalty with a Roth IRA if you take it before retirement. However, you can't take the interest. Spread this message because many of you do these things, and please tell all your friends not to do these things. Don't get a payday loan, or on the internet, I'm sure you've seen, come to us, bad credit, no credit, we'll give you a loan, guaranteed approval. Don't go to those places. A payday loan is, let's say if Professor Wright has a bill of $50 that's due on Friday, and she has $0 in her bank account, and she gets paid on Friday. So what Professor Wright could do, she could go to a payday loan provider, she could write them a check for $50, and then they'll give her $50, but they're also going to charge her interest and fees to give her that $50, and then on Friday, she can pay her bill, and then they're going to try and take the money out of her account, but they're also going to try and charge her a bunch of fees. Payday loans have interest rates ranging from 100 to 800%. I'm not even kidding. And you cannot deduct the interest from your taxes. Avoid bad credit card dealerships such as Drive Time. The catch with those is that they sell you a car, but it's very, very expensive, especially for a used car. It's actually more expensive than a new car. And they charge you an interest rate anywhere from 15% to 25% on the auto loan. You're better off just saving for a car. Don't get a car title loan. A car title loan is when you basically give the title of your car, the ownership right, to the car title loan company, and they give you loan money. And if you don't pay back the loan money, they get to keep your car. And it's very dangerous because car title loan companies, they also charge you interest rates ranging from 15 to 36%. Some do charge over 100%. I was looking on the internet. And the goal for them is to make as much profit off of you as possible. The amount of money you pay them will eventually double and triple. So avoid car title loans. Don't get a loan from a pawn shop. Those are very bad too. They have interest rates ranging from 15% all the way to 200%. You'll see them all over the internet. Don't get a cash advance loan, and don't take cash advances from credit cards. Don't get any really high expensive credit cards. A subprime lender is a creditor that gives credit to people with little or no credit, such as Capital One. They're a subprime lender because they have credit cards for people that have no credit history. Not all subprime lenders, but many subprime lenders give you very expensive credit cards, such as ones with 36, 59, 79% interest rates and annual fees. Avoid getting those kinds of credit cards. Get free credit cards from credit unions. Avoid for-profit schools. Many employers think people who get a degree from a for-profit school, you basically purchase the degree like merchandise you would buy at Walmart. They don't think you had a challenging curriculum. They think the school gave you the degree because you gave them so much money. Employers think that. Do not withdraw money from your IRA individual retirement account before retirement or your 401k or 403b. 401k is if you work for a for-profit organization, your employer gives you a special retirement plan. That's called a 401k. It's basically structured with stocks and everything, and you get tax benefits too. At any time you can withdraw the money, but it's dangerous. When you withdraw money from an IRA or 401k or 403b, 403b is for nonprofit organizations. When you withdraw it before retirement, you have to pay ordinary income taxes and a 10% tax penalty, and that's not cheap. Taking a loan against your 401k and 403b, I don't recommend it, but in a situation where you need to save your house from a foreclosure or your car from repossession, take a loan against your 401k, but make sure you pay it back within 5 years. Because if you don't pay it back within 5 years, then you get into trouble, because then you do pay tax penalties, and it becomes what's called a withdrawal. And you also have to pay ordinary income taxes. And here are the interest rates for payday loans. I don't know if anybody can see that, but 391%, 347%, 325%, and you can see how outrageous they are. So don't get payday loans, don't get car title loans, don't get cash advance loans, don't get those loans on the internet that cater to people with bad credit. Don't do it. The people are going to make them very attractive, but they're scams and they're ripoffs. Closing remarks. Uh, Again, paying your bills is very important. We're in a credit crisis right now. The student loans crisis is emerging. If the Congress does increase the student loan interest rates, it's very likely many people will default because they won't be able to afford the payments. And then banks will have losses and will very likely fall into a recession. So it's very important to pay your bills. And interest rates for everyone will increase because the banks and the government will try to compensate for the loss. They're going to try and make more profit. Employment will not improve if many people are defaulting. Many of you are probably getting notices from your banks that they're now going to start imposing a fee just for having a checking account or a savings account, such as a $5 monthly fee. I'm sure many of you saw on the news that, for example, Bank of America is now going to charge you a fee just for having the checking account. You have to maintain a certain balance to avoid the fee. The reason why banks are doing that is so you use your credit cards more, and also they're trying to make up for losses they endured from the housing crisis and losses they're still having. They're trying to make up for all those delinquent credit cards. So if people are still defaulting, then it's very likely banks will continue imposing all these different kinds of fees. Again, if you have bad credit, it shows that you have low character. And I'm not trying to be rude with that comment. That's how employers view you. That's how banks view you, because in their mind, you're taking loan money from people, and in a sense, you're stealing from them because you're not paying them back. You don't have to be an expert to have excellent credit. It's very easy. Just pay your bills. No matter what interest rate, no hardship, whatever hardship you have, always pay your bills. Always work with your bank. Always inform them if you're in some sort of struggle. They'll work with you. They're trained for these situations. Don't just let the account become delinquent and let them keep calling and ruining your credit. You don't want the level of delinquency growing on the accounts. 30-day delinquency becoming 60-day, it all lowers your credit score.